Hi, everybody. Chris Englebert with this week's Englebert Angle, and we are going to be talking Bitcoin. Is Bitcoin for real? Now, I don't want to get into the debate that a lot of my clients and people have said that, Bitcoin is imaginary. What does it really mean? We've all heard ad nauseum over the last couple of years about cryptocurrencies and what's going on out there. But the point that I want to make today is that you have to look at Bitcoin in a much different way than you might have looked at the last couple of years for two reasons. Number one, the first reason is blockchain. Bitcoin would not exist if we did not have blockchain technology. I'm going to talk about blockchain technology a little bit later in this video, but the blockchain technology is extremely important for Bitcoin. So much so that obviously Bitcoin would not exist without blockchain technology. So what is blockchain technology? In a nutshell, it's a unique piece of code that's attached to whatever the item is going to be. So for example, Bitcoin literally trades billions of dollars every day. And what happens is you have to keep track of all those transactions of buying and selling of a particular Bitcoin or a piece of a Bitcoin or any of the other cryptocurrencies. That's where blockchain comes in, because blockchain gives you a unique tag to be able to discern whether or not this transaction is legitimate. Did it go through? What does that transaction represent? So the other reason why we think, people have to pay attention to Bitcoin is because we now have, as of January 11th, spot Bitcoin ETFs. Now, you can see from my chart here, these are some of the most popular Bitcoin ETFs already. This grayscale Bitcoin ETF, say that fast 10 times, has been around for a couple of years, but it was a futures-related Bitcoin ETF. We've always had a problem with that because anytime you have a futures-related product, whether it be Bitcoin, oil, etc., you have something called contango, which I can talk about in another video. But it wouldn't really track the underlying price of Bitcoin. So when the spot Bitcoin was approved on January 11th of this year, Grayscale changed from a futures Bitcoin ETF to a spot Bitcoin ETF. Why is that important? Because the tracking error is practically non-existent. Now, this phenomena is amazing because if you look at the iShares Bitcoin ETF, IBIT, and again, this is not a recommendation to buy or sell, but we favor the IBIT on the due diligence that we've done because the internal expense ratio is extremely low. Some of these Bitcoin ETFs are not charging any internal expenses for another year to up to a year and a half. But you can see the flow of assets that literally in the 2 months that these spot Bitcoins have been around, IBIT has collected 2.7 billion, yes, with a B, dollars that flowed into this Bitcoin ETF. It's going to go down in history as one of the most successful ETF launches literally ever. But you can see that there's some other spot Bitcoin ETFs out there. But again, you have to know what you're buying because you can see some of the popular ones are leveraged Bitcoin futures ETFs and inverse. Again, people like to, I hate to say gamble sometimes, but you can sit there and gamble with short Bitcoin ETFs or futures as well. So again, there's two reasons why we think Bitcoin is becoming much more legitimized. Number one, it's blockchain technology. Number two, it's the advent of ETFs. Now, we kind of harken back to the 1980s when the emerging markets first became an asset class that everybody was interested in investing. Those are the Asian countries out there. Vietnam, China, remember, back in the 80s was considered an emerging markets, and in some cases still is. So what happened is that institutional investors were like, hey, there's a lot of value in these Asian markets. We call them the emerging markets. And so they started to come out with investment strategies, mutual funds, and eventually ETFs. And that legitimized the emerging markets as an asset class that investors can obviously put their money into. We think the same thing's happening with Bitcoin, where people are beginning to understand that it looks like it's a legitimate asset class out there. But how do you trade Bitcoin? Well, our particular view is we're always looking at correlations between different markets. And it looks as though Bitcoin appears to trade almost in lockstep with the NASDAQ. So the NASDAQ, obviously in 2022 had a sharp decline. On the right-hand side of the screen, I show Bitcoin selling off sharply. NASDAQ bottomed around November, December of 2022. You can see that there was a sharp rally in the NASDAQ, a pullback during the banking crisis, last year in 23, and then off to the races in the fourth quarter of 23. You can see Bitcoin's following almost exactly the same pattern, but with a much more violent and a much more almost leveraged way. So if we see the NASDAQ go up 15%, Bitcoin looks to go up 30%. So if you're trying to figure out a time to invest in Bitcoin, we'd strongly suggest you keep an eye on the NASDAQ. The QQQs are the symbol for the most popular NASDAQ ETF that's out there, and that might give you an entry place on where you want to buy Bitcoin, obviously, if you want to make that part of your investment portfolio. But again, we think the real attraction of what's going on out here is that the blockchain technology is here to stay. Again, it's a unique piece of computer code that's attached to obviously every blockchain every Bitcoin transaction, so you can track what is being bought or sold. But we think the blockchain technology has much, much bigger implications than what people realize. Now, think about this. There could be some major disruptions from the utilization of blockchain technology, which we think is going to become much more important in our lives in the next 5 years than what people realize. For example, legal contracts. You can then take a legal contract, sign that legal contract, and using blockchain technology, be able to send it to somebody knowing full well that that's the original contract and that's the one that's in force. What might that do? We actually could see that you might not need an attorney all the time to be able to review a legal contract, because many times the disputes in legal contracts are, is this a verifiable contract? Is this the original contract that we signed, etc.? Well, with a blockchain code attached to a legal contract, that's going to change. Now, remember, the last big event that we've had as far as technology goes is to take a piece of paper, scan it in, and be able to store it. Well, all you're doing is scanning in a piece of paper, making an electronic copy of a piece of paper. With blockchain technology, you're able to put a unique tag on that piece of paper. What might be another area of disruption? Title insurance. If you bought or sold a home, title insurance drives me crazy, because when you go to remortgage your home or buy a new home, let's say you're the original purchaser of the home, you're going to be charged, the buyer's going to be charged upwards of $2,500 to be able to say that that title on that home is yours. Well, guess what? If you have blockchain technology attached to your title, you are the original owner of that title. It's being able to be verified with blockchain. So you might see some disruption, obviously, in some different areas like title insurance. The other area where we think blockchain is going to be a big disruption is going to be many new investments can be created because the underlying collateral can be tagged. Many of these Ponzi schemes out there are where people saying, hey, I'm buying 100 of these properties and they're in the portfolio, when we know darn well the properties are never in the portfolio. All they did was buy one property and reproduced a deed or a title or whatever the case may be to make it look like they bought 100. Well, if you have blockchain technology attached to a particular piece of collateral, a house, an office building, a car, whatever it may be, you're able to instantly verify that that piece of collateral exists, it's being held somewhere, and it's actually worth something. So again, just to recap, we think Bitcoin is here to stay. There are also some other cryptocurrency ETFs that are coming out in the near future. It looks like Ethereum is going to be coming out in May sometime as an ETF. But we think what's really driving the innovation of these products is, again, blockchain technology. And we think that that's really going to have a much bigger impact in our lives than obviously somebody buying or selling Bitcoin. Again, if you want more information, you can always contact us. You can see this video by downloading my app, by texting Chris E, C-H-R-I-S-E, to 36260. That's the Englebert Angle for this week. This will be up on our website shortly. Thanks, everybody, for watching. We'll talk to you soon.